YouTube live right now, which is crazy because I never do this, but I want to do it. Nobody's in here right now, but what I am going to be talking about is pre-foreclosures right now when it comes down to Harris County and when it comes down to the city of Houston specifically. Dude, these pre-foreclosures are out of control. There are so many homes right now headed to auction in about 2 weeks. I have literally went through each and every single last foreclosure trustee document for the month of April for all the auctions going on. Some of these people have gotten loan modifications. Some of these people have filed bankruptcy. Some of these people have done restraining orders on the bank. Some of these people were able to get HUD assistance from the government to catch up the delinquent amount. Some of these people were able to get the money from friends, family, and in savings just to catch up the delinquent amount. And some of these people are just sitting here with their hands behind their backs, believing that they're not going to go to auction. Believe it or not, even when you show them, go to Google, type in their address, and you show them on Zillow, and their property is listed on auction.com to go to auction, they're just like, I'm gonna figure it, I'm gonna be okay. You have 2 weeks, less than 2 weeks to go to auction. And they're just sitting there. And so the month of April, when I went through each one of the trustee documents, the homes that are going to foreclosure, they're going to be residential homes, condominiums, single family apartment units, like just one single apartment, and then also apartment complexes, 25 doors, 50 doors, 350 doors. Some of these apartment complexes have loans from 8 million. The most I've seen was a $26 million loan. And with apartment complexes, the reason why these apartment complexes are going to foreclosure is because with apartment complexes, they're cash flow producing assets, right? So think about a residential home. You buy it, rehab it, the BRRRR strategy. You buy the property at a discount, rehab it, renovate it, rent it out, then you refinance, pull some cash out of the refi and hold it as a rental, right? On a 30-year rental loan. When you do the refinance, you do it on a 30-year rental loan traditionally, which is called a DSCR loan, debt service coverage ratio. It's going to be on a 30-year loan. Cool. When it comes down to apartment complexes, typically when you buy an apartment complex, you're going to be buying these apartment complexes on a bridge loan, right? You're buying the apartment complex on a bridge loan. So when you buy the apartment complex on a bridge loan, typically these bridge loans are 3 to 5 years. So they're not 30-year loans. And you're talking about a $26 million loan you're buying on a bridge loan, okay? You're buying this on a bridge loan for 3 to 5 years. And guess what? It's only gonna be for 3 to 5 years, and then the interest rate is adjustable. So the reason why you're seeing a lot of these apartment complexes that are going to foreclosure auction right now is because these apartment complexes, 35 units to 150 units to 350 units, these big, large multifamily assets, these apartment complexes, the reason why you are seeing these go to foreclosure auction is because they're on 3 to 5 year mortgages, adjustable interest rates. So when they bought these apartment complexes, let's think about back in 2021, because it's 2026 now. Back in 2021, 2022, what were the interest rates? They were 2.3%, even 3 to 4% interest rates, right? If you buy an apartment complex on adjustable interest rate, that means that you're buying this apartment complex on an adjustable interest rate. So if you bought it at 2 or 3%, now that interest rate is at 6 to 7%. You're no longer cash flowing. And back then, people were buying these apartment complexes right there at market value, if not higher than market value, because they were buying the properties because of the cash flow. But interest rates went up. And now, so when I say a bridge loan, these loans are on 45 years. What that is a balloon loan. They'll buy the loan on maybe 30-year terms, but it's going to be a balloon payment in 5 years. years. That means you got to refinance out of it because it's a lot of money. And so if you think about a 30-year loan with a residential property, what? It's $250,000, $300,000, 180 grand. Banks don't mind doing $150 to maybe $250,000 worth of debt on 30 years because they're going to make a lot back, and that's not a lot to give out, right? But when you're talking about a $26 million loan, a $7 million loan, $10 million loan, that's a lot of money to be dishing out, and they don't want to have that much money on one asset over the course of 30 years. So this is one reason why they do 45-year loans, so they can get that money back. But the danger of it is it's on an adjustable interest rate. It's almost like they lend this money out knowing the borrower is going to fail. To be honest with you, that's what it almost seems like. And when they lend this money out like this to these borrowers at a 2 to 3% interest rate with an adjustable interest rate on 45-year terms, guess what's going to happen in 5 years, which is 2026 now? You have a lot of renters who are losing their jobs. These property values have gone up since 2022. So guess what? If the property value, if the property value goes up, the taxes goes up. The taxes go up on the property. So that's going to increase your monthly payments. There's things you cannot control inside of a mortgage payment. You cannot control taxes because if that property value goes up, your monthly payments are going to go up because the taxes go up. And guess what also has happened over the course of 3 to 5 years? With inflation, insurance has gone up. So now they gotta get into insurance. And if you cannot get an insurance company to insure your asset, the mortgage company is going to foreclose because they're not going to have all that money out there on an asset and the asset's not insured. So now this mortgage company is going to foreclose, even though it's producing cash flow, it's uninsured cash flow. So now the mortgage company is going to foreclose because there's no cash flow. I mean, it's not insured. And why is it not insured? Because insurance has gone up over the past 3 to 5 years. And you can't refinance it to another bridge loan because you can't get insurance. And in some instances, some of these insurance companies have withdrawn coverage, especially in Florida. So imagine taking out $26 million worth of debt at a 2% interest rate 3 or 4 years ago. You're like, man, I got a slamming deal. Here we are now, 3 or 4 years later, inflation goes up. Interest, because you got this loan on an adjustable interest rate. Now your interest rate is at 7%. On a loan you got 4 years ago at 2%, and you had an insurance package on it, which is affordable, and now the insurance premium has gone up 3 times the cost it was when you first got into the asset. That's why these multifamily deals are going into foreclosure. That is why. And so they can't refinance into another loan. They can't get insurance on the asset. The bank's taking it. And it's really sad to see. But it's opportunity for those that know how to get to these deals ahead of time and try to negotiate a deal with these borrowers. The thing is, even if you take on that debt, will you be able to get insurance on it? Will you be able to get a loan at an affordable interest rate? Because the debt is at $16 million. So you're going to be taking on a $16 million debt at a 6-7% interest rate. Insurance is high. I mean, the bank's going to take the debt. And so it's unfortunate. I'm seeing this go on right now, and I've been door knocking pre-foreclosures this entire month. I've literally gone through each foreclosure document for Harris County, which is in Houston, Texas, and a lot of these people it's sad situations, and some of them are selling, some of them are under contract, some of them are just waiting it out, some of them are just not letting anybody do anything. I have one guy said, I'm just going to let it go through the courts. I'm like, why would you do that? He's like, well, because if I let it go through the courts, I'll get some money back after it goes to auction. And he's talking about surplus. And the thing about surplus is you get that only if someone at the auction buys the property. That's first and foremost. Secondly, is if they actually bid higher than the debt that's due. And so what happens if nobody bids on the property at the auction? The bank's going to take it. There's no surplus. You lost all your equity for nothing. Secondly, if someone does bid on it at the auction, what if they don't bid that much over the debt? And so you can't predict your property is going to sell 100 grand over the debt that's due. You can't predict that. That is very unwise to think that way. And so you have people thinking like that. And so it is March freaking, what's today's date, man? I'm just out here working, don't even know what today's date is. March 23rd, March 24th, March 24th, Thursday, March 24th. And the auction is literally like freaking 2 weeks away. And people are thinking like this, you know? So, I mean, I don't know, man. I don't know. I'm literally sitting here with a bunch of private money, with a bunch of capital partners that are ready to partner with me on deals. I'm out here trying to outsource opportunities off market for people that could use my help, that could use my assistance to cash out on their equity. And they're just playing hard to get. They're playing hard to get. They're playing stubbornness as well. Yeah, March 26th. So Thursday, March 26th. And so they're just playing hard to get. And it's just like, you know, you can continue to gamble and rumble if you want to, but you're 2 weeks out from the auction and you haven't been able to slow down the foreclosure proceedings on your property. And so, you know, you just gotta stick with it. I didn't land any contracts this month, but that doesn't mean that I won't land any contracts. But we're really on a short timeline right now because we're 2 weeks out from the auction. So nonetheless, guys, stay tuned. Keep you guys posted, and thank you for following the channel. Thank you for watching this live video, guys. And I will keep you updated with foreclosures here in Houston, Texas. All right, peace out.